start. The stock of the day is Zipco. No news today, except shares are getting hit hard. So again, today, Zipco, if we bring that chart up, excuse me, I've got a tickle, down by 4.3%. They've been down for a while, down 20% last month, well off the highs of $13.95 that we saw earlier this year. So that was back in February. And look, if you take a bigger step back, you can obviously see the enthusiasm for these buy now, pay later names, but many in the market are asking, is Zip too cheap to ignore right now? Or are the best days of BNPL behind us? Luke, Winchester, Merewether Capital, I'm going to start with you on this one. Stock of the day, Zipco.
Hey Nadine, how are you?
Good.
Yeah, look, I mean, Zipco, I've spoken about Zip and buy now, pay later a few times, you know, coming up on the call or just in general. And I've sort of been consistent for a while that I've thought that what I've termed third tier buy now, pay laters were in real trouble. And we're talking about Zip today, but go and look at the charts of Lay-Buy, OpenPay, Split It, Sezzle, the list goes on. They look worse than that Zip chart. I've always thought Zip's a little bit in between. Zip's, you know, getting towards that point where it could hit scale. They've got ambitions to get there over the, you know, FY22 and beyond into that medium-term target they've set themselves. So, you know, I think Zip's, like I said, it's not quite up there with Afterpay, Klarna and Affirm. It's that next level down, but it's a more sustainable business than some of the other peers. I think really what's happened is the sentiment has changed completely in the whole space, but with Zip as well, where no longer is the market just looking at the top line growth of these businesses. We know the top line's strong. You see that in every update. You see it in their AGM update again. You know, 74% growth in the US. 174% growth in the US, 41% growth in Australia. So still growing, but no mention of net transaction margins, operating losses. And I think that's what the market wants to see. They want to see these businesses pivot to some sort of sustainability. Look, Zip, like I said, it's better than those other peers in the space. It's not an Afterpay, Klarna or Affirm. That's the issue I have. I think if you own it, you probably hold it. But even on this slide, I can't come in with a buy, Nadine. I think it's a hold at best.
All right, let's get a view from Michael Gable from Fairmont Equities, because it certainly looks as if the momentum is to the downside. So yep. Would you be selling if you're already a investor, or again, to the point, is it starting to look interesting at these levels?
I'd still be a seller at these levels because, you know, with what's happening, as I mentioned at the beginning of the show, with tapering and high PE stocks, you know, we can see potentially further downside in Zip. So nothing to do with the business, it's growing, that's great, but there's this other factor at play. You know, I think when we saw the merger with Afterpay, there was a lot of hope that some of the smaller players would all be gobbled up, and there was a lot of consolidation happening in that space. But I agree with Luke in that this one's sort of in the middle, so it's not small enough to potentially be gobbled up. It's just going to remain as a competitor to these larger firms like Afterpay and so on. So
Afterpay that's, you know, now got the backing of Square, now called Block.
Exactly. So look, they're still growing great. I mean, you know, the growth in Australia slowed down a bit as you'd expect. Still growing quite well in the US, but you know, beyond that, yeah, they might just end up, you know, falling by the wayside because of competitive pressures. So yeah, and as you mentioned, the momentum's clearly to the downside here. So it's just shedding too much value each day. I'd rather just be out of it.
Got it. Thank you. So that is not yet a buy, perhaps maybe never, but definitely not today.